Hey friends, welcome back to the channel. So Warren Buffett gave us his last letter as chairman of Berkshire Hathaway, and he opened that letter by saying he will no longer be writing Berkshire's annual report or talking endlessly at the annual meetings. Just that alone breaks my heart. That is so sad to hear. But then he gives us a little bit of a reprise. He says, sort of. And then he goes right into talking about his successor. He says Greg Abel will become the boss at year end. He's a great manager, a tireless worker, and an honest communicator. Wish him an extended tenure. And it makes sense why he's saying this now. Berkshire's stock price has been all over the place since Warren Buffett announced his retirement. There's tons of really good nuggets in that letter that we'll go over in this video. And then we'll go into a stock that I've been studying very closely and I'm really close to buying it, and that's Duolingo. We'll go over what I'm seeing in my research, what's drawing me to the company, and the big questions I have remaining. This is a stock I started studying about 2 months ago, but since I released my first bit of research, the stock's down 40%. So I'm really interested in it now. Then we'll go over some exciting new product updates from Facebook. They released the follow-on product to their Ray-Ban glasses, which have been ultra successful, and it shows which direction the company's moving. This is another company that got completely crushed after their most recent earnings call, and that's because they are investing massively in their AI infrastructure build-out. We'll go over Zuck's response to this and see if it's a buy right now. It's a very busy episode, but first, you may realize that things look a little bit different around here. I'm back to my home studio. And that's because we heard from you guys, and that's because we listen. We heard that you prefer the essay-style video content as opposed to the podcast style we were doing with Money Grooves. I'll say more about that at the end of this video, but let's get to the Buffett letter. Okay, it's important to remember, Buffett is 95 right now, so he is definitely past his age of retirement. He actually writes later in the letter that the average CEO of Berkshire Hathaway into the future should not plan on retiring at 65. He wants people who love what they do running that business. And speaking of his age, he talks about Father Time being undefeated, typical Buffett aphorism. And he says that he surprisingly feels good. Though he moves more slowly and it's more difficult for him to read, he's still in the office 5 days a week. Again, at 95, he still loves what he does. And then he says he still gets some good ideas, but they're pretty rare. And because of Berkshire's size and market levels, hint hint AI bubble, the ideas are few, but not zero. That's something we've harped on a bunch on this channel. When valuations are really high, like they are today, there's definitely still opportunity out there, but it's just harder to find. But it also really prepares you for when things do crash out because you know the value of things and it's like the store went on sale. It's time to celebrate. And the whole reason for this letter, although Buffett has released a Thanksgiving letter every year for a long time, he said that the purpose of the letter is to tell us that he's converted 1,800 A shares into 2.7 million B shares, which is about $1.3 billion in Berkshire stock, and he's donating them to his 4 children's foundations. And he wrote that he will continue to hold on to those A shares until the Berkshire shareholders develop the comfort with Greg that Charlie Munger and him enjoyed. So again, he's really voting on his confidence for Greg Abel, but he also knows how important he is as Warren frickin' Buffett that the market might not really like a newcomer coming in. But he again quips, that level of confidence shouldn't take long. But going back to the idea that valuations are really high right now, Buffett really does try to say, hey, it's okay, stocks go down sometimes. That's just the nature of the business, but over the long term, they go up. He said, our stock price will move capriciously, occasionally falling 50% or so, as has happened 3 times in the 60 years under present management. And just like one of my favorite Buffett sayings and one of his most famous sayings, he says, don't despair. America will come back and so will Berkshire shares. What he's saying there is be greedy when others are fearful. And then the next big takeaway has to do with CEO compensation, because of course it's a Buffett letter. It has to talk about how America is supposed to run its businesses. He says that during his lifetime there was a big change in how CEOs are required to disclose their compensation. And he said that they sought to do that because they were trying to embarrass CEOs by requiring the disclosures. And that those were good intentions, but they backfired. He said based on the majority of his observations, which Warren Buffett has access to literally every CEO in America. If Warren Buffett calls, people will answer. And he said that the CEO of company A would look at the competitor at company B and subtly convey to the board that the CEO is worth more, and they use it to expand CEO pay. He says envy and greed walk hand in hand. And would consultant ever recommended a serious cut in CEO compensation or board payments? Which reminds me of a really famous Charlie Munger quote where he says that he would rather drop a pit viper down his shirt than hire a CEO compensation committee. And the data shows exactly what Buffett's talking about on CEO compensation. You can see on this chart, which is looking at how much a CEO is making in a company compared to the average worker. And funny enough, 1965 is the year that Buffett started at Berkshire Hathaway. You can see that in 1965, the average CEO made about 20 times the earnings that the average worker at the company would. And then it just exploded, most likely due to the disclosure requirements that Buffett talked about. And now we're getting even higher at 280 times the average employee. That's freaking ridiculous. But then Buffett ends the letter with a really, really important memo on life. He says, don't beat yourself up over past mistakes. At least learn a little from them and move on. And then he says, get the right heroes and copy them. You can start with Tom Murphy. He was the best. Tom Murphy was the CEO of Capital Cities. If you want to explore more about him and what Buffett has to say about him, you can check out the book The Outsiders, which I purchased in 2020. It is a fantastic book. And then he tells a story about how Alfred Nobel, the person who the Nobel Prize is named after, read his own obituary and was horrified at what he read and realized that he should change his behavior. And then he says, decide what you would like your obituary to say and live the life to deserve it. Greatness does not come about through accumulating great amounts of wealth, great amounts of publicity, or great power in government. When you help someone in any of the thousands of ways, you help the world. Kindness is costless, but also priceless. Whether you're religious or not, it's hard to beat the golden rule as a guide for behavior. And then he ends by saying, keep in mind the cleaning lady is as much a human being as the chairman. And that's how he ends the message. Then he wishes us all a happy Thanksgiving. Yes, even the jerks. And remember to thank America for maximizing our opportunities. It is inevitably capricious and sometimes venal in distributing its rewards, which is what he talked about when he was talking about CEO compensation. I'm really sad about this. I've read every letter that Buffett has written since 1965, and there's a high probability that this is the last one we'll ever see. I hope not, but it is. So, genuinely, Warren, thank you. Okay, let's talk about Duolingo now. So like I said, I started this research and I read their annual report about 2 months ago. And I liked what I was reading. You know, they're a founder-led company and their mission is to develop the best education in the world and make it universally accessible. And they are moving well beyond just language. They've already released their chess features, some music features. They're trying to teach the world everything, which is a huge mission. We talk about in the course, which you can access for free. We talk about when you're looking at a CEO of a company, you want to see what their big, audacious goal is. That's a pretty audacious goal, so I like seeing that. And then when we start to look at what's going on with the business, it makes no sense why this thing got chopped by 60%. I mean, look at this revenue graph. It's beautiful, and it's up 39% in the last year. Net income also spiked 349%. Their book value is rising. Their shares are going up a little bit, which we don't like to see. That means they're diluting us a little bit. So stock-based compensation is probably playing into this. But then look at this free cash flow growth. So there's so much that I like about this business. But one of the things that I really love that I uncovered through the course of my research is that Duolingo is just an experimenting company. Everything they do, all the user behavior they drive, is the sum of thousands of experiments. And they run them fast. Whether they're successful or not, they take the lessons learned and then they improve their app. And during my research, I found that they have a Duolingo handbook that they released this year. And in it, we get a letter from the CEO, which is always great to see. He also writes a letter every quarter, which I really love to see. And then he talks about they're taking the long view. They're raising the bar. They need to make sure that everything is delightful and polished when it gets to the user. And in this document, they really cover what they believe makes a great app and how they're going to make their mission come to life. It's really, really good, and I highly recommend reading it. It reminds me exactly of the master plans that Tesla releases, which is where they lay out exactly what their plan was. In their first one, which was released in 2006, they talked about how they were going to release the Roadster, and then they were going to release a luxury sedan and a luxury SUV, and then they were going to do the Model 3 and the Model Y to lower the price over time with scale as they built the brand out. That's exactly the same energy I got from Duolingo's business plan. But the big thing I needed to get my mind around was their growth strategy, because it seems like the app's already at saturation. I mean, I know a ton of people who use it. And instead of us having to guess, they tell us exactly what their flywheel is, which again, I love as an investor. But it works like this. They have their learning flywheel, which is for their free users, and then their investment flywheel, which is for their paid users. And they say that they're collecting data and insights from their free users, which is then creating greater efficacy and more engagement, which leads to more learners. But then on their paid user side, they're getting more paid subscribers, which leads to more investment, and it just continues to grow like that. So that's a really simple way for them to lay out their growth strategy, but there's even more. They talk about how they want to grow users, how they want to expand the learners to all around the world. Right now it is mostly used in the US, except they have a large language course around learning English. They want to teach better. They're going to use technology to do that. You've already seen their AI chat features get released to Max members. And then they talk about how they're going to grow subscribers and they're going to become the proficiency standard. They want the Duolingo score to be a universal credential for language proficiency. And they want to expand beyond language learning. So yeah, I'm really thinking about taking a position in Duolingo. I really like what I'm seeing, and at this current stock price, $8.83 billion valuation, that seems like a really good buy for a company that is known by everyone. But I'd really love your ideas on whether or not you think Duolingo is a good buy. One of the ideas of Flank is that we share our analysis so that we can have someone else check our SICs and maybe point something out that we're not seeing. And on my first post on Flank, we had a user basically talk about there's 3 factors that impact Duolingo's growth trajectory. And in this, they talk about the behavioral moat through the habit architecture, where that experimentation processes that the company continues to run is going to just get better and better over time. And then how they are using the freemium model to attract more people. It was a really good comment. And thanks, this is Jordan, for helping us out. And again, I love that Duolingo is a founder-led company. I haven't completed the leadership section of my research yet, so if you want to see it, make sure you sign up to flankinvesting.com. You can access it for free, and my research will probably be out tomorrow or the next day. But speaking of founder-led companies, Meta has also gone on sale recently. The stock's down almost 17% in the last 3 months. And that can all be summed up by one thing: heavy AI spending. Meta shelled out $18.8 billion over the last 3 months just on AI investment and told investors to expect full year figure as high as $72 billion. That is a shit ton of money. And here's CEO Mark Zuckerberg's explanation for it.
And if we end up misspending a couple of $100 billion, I think that is going to be very unfortunate, obviously. But what I'd say is I actually think the risk is higher on the other side.
Misspending $100 billion would be unfortunate. You would never see Buffett say that. And that's one of the things that makes Zuck great, is that he's not afraid to take these risks. But I don't necessarily want to be exposed to that any more than I am just by holding the S&P 500. But there still are really interesting things happening at the company. Their Reality Labs saw a 270% increase in revenue, although it still booked a $4.4 billion loss in that division. And that's because they're massively investing in their new Meta glasses. And people I know who use the shades really do like it. And the new version has a heads-up display where you can actually see what's happening, and you wear a wristband that will allow you to control the device. And you can see that from their most recent earnings report, revenue's up 21%. Net income is stalling out a little bit because they're investing so much in AI, and they're also paying their AI researchers like literally 9-figure salaries. So Zuck really is betting all in on this. But the stock isn't exactly cheap yet. It's trading at 26 times earnings, so that's a little bit too expensive for me, and I'd rather wait for the dust to settle or for this AI bubble to pop, in which I bet you'd be able to buy Meta for like a PE ratio of 10. It's been there before. During the last crash out, when they were going all in on the metaverse, the stock got completely crushed, and we had an opportunity to come in at a very, very bargain price. So I'm gonna wait for another one of those to happen. That was what happened the last time Zuck made a huge gamble. But there's kind of a double-edged sword to having a money printer, right? Their ad revenue is a straight-up money printer, just like Google had in the 90s and early 2000s. People will advertise on Meta. They're gonna get better at it because they're using AI to better target ads. So I'm very bullish on their ad business. But then because you have a money printer in the back of your office, you'll oftentimes take for granted how valuable a dollar is, which is what we're seeing when the CEO is saying we may misspend hundreds of billions of dollars. That's insane. I don't really like to see that. Okay, that's all for the main content today. But I did want to say that we really are listening to you guys. We heard that you like this more essay style content, so that's the kind of content we're going to make. But I want to say something to Elliot. Thank you so much for being there, man. For those who haven't seen our recent videos, I don't want to link to it because you can see it if you just look at, you'll know what video it is when you look at the title. But this last summer has been some of the darkest moments of my life. I wasn't able to produce a video. It had been like 60 days since we released a video, and then I released that sad one. And Elliot was there for me. And I'll never forget that, Elliot. I I genuinely appreciate it. And he'll still be around. He's still on the platform. He's still writing research. And we'll do periodic updates from time to time with him, which I think will be really cool. So that's all for today's episode. Thanks again so much for watching. Please give us feedback. Do you like this style? Do you like the multi-topic discussions? We're going to try to do that more instead of just doing a single stock company video. I'm going to make it more of like an episode. And of course, if you want to reach out to me, the easiest way to do it is on flankinvesting.com. Thanks again so much for watching, and we'll see you in the next one.